Welcome back to my channel where I'm helping you navigate the wall of information that is the stock market. So far, I've identified these two companies, CNX Resources and Polar, and how I got to them is in previous videos, so you can go back and watch them. I'll link them below. But today we're talking about recession-proof stocks. What's going to happen in the future when the recession happens early next year and what will go up in value. So the first thing that comes to mind is what's known as an inferior product or an inferior good. An inferior good is an economic term that refers to an item that becomes less desirable as the income of its consumers increases. So when people have more money, people move away from it. Now, when there's a recession, people have less money, so people move towards inferior goods. So what are we talking about here? We're talking about pound shops, dollar stores, cheap products. Here in the UK, we have a company called Poundland. However, they're not listed on the stock market. In the US, we have US dollar store stocks here. We have Dollar General, Dollar Tree, and Five Below, each with a market cap of 50 billion, 30 billion, and 9.4 billion. Somebody's making a lot of money somewhere off this stuff. And if we look at the share prices for, say, Five Below, over the last 5 years, up 145%, okay. And I've highlighted the part in the middle, January 2020 to January 2021, to indicate that after the coronavirus, this has gone up in value and it's stayed up, indicating now this is obviously a valuable part of the stuff we have, the stuff we buy. If you look at airlines, for example, they haven't come back yet. Dollar Tree, similar story, 2020 to 21, but it's rocketed into 22. Dollar General, the biggest one, they've had a steady increase since 2018. That's a sign of a very good company. It looks like they know what they're doing. Now here I'm interested in the underlying stuff that's going on. So what we're saying here is we're getting goods from China, probably, and we're getting it shipped over to the US and Europe for resale to us. So if I pull up this article here, we're saying shipping costs quadrupled to record high on China-Europe bottleneck. Soaring prices fueled by shortages of containers and recovery in consumer demands. If you look at the bottom, the date is January 2021. Okay. If we go to our friends at Freightos Data, there's something called the Baltic Index, which is the cost of shipping containers and how much it costs to ship stuff all over the world. And if we look over the last year, we can see that it's gone from 2,500 to 10,000 since July 21, so the reopening of coronavirus. So what we want to know is what's happening behind the scenes of these companies. What's the economic factors that will affect what's going to happen going forward so we can make predictions upon that. So if I go back to my original UK company here, Poundland Financial Results, I can see here that revenue for the group is up 19.3%, sales growth 3.1%, 483 new stores opening to bring the total to 3,500 as of December 21. If I keep going down, Poundland, 47% surge in half-year profits. Okay, but then the bottom one says Poundland sales and profits tumbled. Let's try a bigger company we've all heard of, Walmart, 572 billion USD revenue per year. That's how much money they take in every single year. If we look at the front page here of their website and scroll down, we can see build your carts. Okay, 362, 892, 50 cents. Okay, so they're obviously very focused on price here. They're obviously calculating how much the shipping costs, how much they can sell, how much people will buy at any one time, the transportation, all that kind of stuff. And they're passing that on to the consumer, keeping their prices low. If we look at the financial information here, 2021 annual reports, this form 10K. United States Securities and Exchange Commission. Okay, you'll see a lot of these with public companies. They have to make these available for investors, for you and I. Risk factors. General or macroeconomic factors, both domestically and internationally, may materially adversely affect our financial performance. Okay, so the first sentence is general economic conditions or other economic factors globally or in one or more of the markets we serve may adversely affect our financial performance. So what they're saying there is there is stuff that can happen in the world that can affect our company. Pretty obvious. But if we go down to this second sentence here, I'll try and do it all in one. Higher interest rates, lower or higher prices of petroleum products, including crude oil, natural gas, gasoline, and diesel fuel, higher costs for electric and other energy, weaknesses in the housing market, inflation, deflation, increased costs of essential services such as medical care and utilities, high level of unemployment, decreases in disposable Can't do it. Decreases in consumer disposable income, unavailability of consumer credit, higher consumer debt levels, changes in consumer spending and shopping patterns, fluctuations in currency exchange rate, higher tax rates, blah, 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 blah. The list goes on. And the reason I've highlighted it is because they've put it all in one sentence. I think that's a legal thing because they're saying, look, these are our risks. This is the factors that can affect our business, which if we're looking at this sentence is pretty much everything. If we go down to the bottom sentence, in addition, the economic factors listed above, any other economic factors or circumstances resulting in higher transportation, labour, insurance or healthcare costs or commodity prices and other economic factors in the US and other countries in which we can operate. They're trying to cover themselves here by saying there are so many risks to our business, we can't control outcomes, so you might just lose money. Okay, fine. So instead, let's look at this. This is much easier to understand. Factors of buying behaviour. Now, the reason we're looking at this is because that's what we want to know. We want to know when there's a recession, people have less money. What is their buying behaviour? Where's the money going to go, which is going to affect the share prices of the companies that we're looking to invest in so we can make money? Okay, needs, personal influence, emotions, attitude, age, income. Income will change when there's a recession. People have less money, economic situation. So we're saying... So what we're looking for, again, is facts. Facts to say what's going to happen here. What can we make predictions on and calculate things on? So if we go to the other end of the spectrum here, inferior good is cheap things. Let's look at expensive things. Ferrari. Share price over the last year rocketed into 21, then plummeted and is now up again. Okay, if I go back to November 21, when the share price was up, stock of the week, Ferrari, from morningstar.co.uk. Ferrari has just put out quarterly results with numbers ahead of expectations. Okay. Ferrari ships 2,750 cars in 3 months to the end of September 30th, 21, up from 2,313. So an increase of 400 and something. That's a lot of money for 400 Ferraris. Right. But if we go back to 5 years of the share price here, again for Ferrari, and we look at February 2020, before the coronavirus, to July 2020. So that's February, March, April, May, June, July. We're saying Ferrari recovered from the coronavirus within 5 months. So that tells me there's a lot of rich people out there still buying Ferraris. It was the same with housing. The boom for housing after the coronavirus, it rocketed, especially bigger homes with more space. Okay, I don't think that's correlated to what we're doing here at all. I don't think you'll find any links between those two things. So the question I'm asking myself is, if people are worried about money, what do? They try to save costs. They try to bring their income up and bring their costs down. So I go on to here, moneysupermarket.com. Super save with Money Supermarket. 7 ways to save with Money Super 7. Okay, this company has changed. This company had a very different approach. This to me is quite budget. So it looks like they're targeting people who don't have much money and they're trying to save on their money. So that's kind of what we're looking for. We're looking for people who will be adversely affected by the upcoming recession, which is unfortunately people who don't have an awful lot. So if we look at the share price here, over the last 5 years, surprisingly they've been plummeting since coronavirus. I would have thought that because of coronavirus people had less money, there would have been more on top of doing this sort of thing. If we look at their annual report, if we look at their financial highlights, we're saying it's down for revenue, down for profit before tax, down for EBITDA, which is earnings before interest, tax, depreciation and amortization, down on earnings per share, down on adjusted earnings per share, and dividends per share is flat for 3 years straight. So they're still paying out dividends. And if I do a quick Google search, I see so many price comparison websites here. So that could be it. We're saying they've plummeted because of additional competition, but that still doesn't give us any kind of indicator as to where to go next. Where is our yellow brick road, as I like to say. And so if I look at my sectors here, and I scroll down the list, I'm asking myself, what do people need? People need food, water, somewhere to live, that kind of stuff. Now, I do actually remember watching a show about the crash in 2008, about this guy who made money, it was a pawn shop for the rich, and it's called Posh Pawn. Unfortunately, it's a private company, and it was just rich people who were selling their Lamborghinis to this guy, pawn shop, to raise some money. There was other companies like Wonga, who were payday loans. They were making $1 million a week, I think. 10 years ago now. They are now gone. So what I'm looking for here is something to move on. If there's a recession on, we can definitely say people are less likely to move house. And that will be in a year when the recession starts. Right now, people do want more space. I've got this article here from a few days ago. House prices surge as Londoners descend on Brighton and Hove. So people are moving now, but they won't be moving in 6 months' time. Then what are we saying here? We're saying home improvements, capital investments. So we can ask ourselves, that is capital invested back into the property because they won't be moving in a year. What's happening with home builders and building supplies? So let's Google here. Ways to increase the value of your home. Home finishes, energy efficiency, freshen up your curb appeal. Makes you sound like a drug dealer, but okay. Put your money in your kitchen and bathroom. Finish off your basement. Clean and declutter. Clean and declutter before showing your home. Okay, people of fscb.com. Thank you for that. How to add value to your home. 10 of the best ways to add value to your home. Number 1, deal with structural issues. Saggy roofs, rising damp, structural cracks, rotten joists, insect infestation. Add value to your home with new heating system. Will a garden office add value? Rewiring. Invest in solar panels. If we're talking about home improvements, in the UK we have this company called Kingfisher PLC. Kingfisher PLC is a British multinational retailing company headquartered in London. They have 1,300 stores in 9 countries. Brands include B&Q. B&Q is like home improvements. The slogan goes, you can do it if you B&Q it. If we Google the website here, we can see the current website is saying shop for everything you need to complete your home and garden project. Order online for 1 hour, click and collect, or free home delivery on orders over £50. Are they predicting the same thing we are? That people will improve their homes rather than move? If we look at the share price of that company, we can see after 2020, it absolutely rocketed. People are improving their homes, staying at home. But on the other side, they also own this company, Kingfisher, a company called Screwfix. Screwfix is trade building materials. So people building houses, which is kind of the opposite, because if people are staying in the same homes and we're not going to build more homes, then you think trade materials would be less. But if house prices go down, people will move on private jobs, so fixing up older homes. So if I look at this company called Travis Perkins, timber and builders merchants, 4.5 billion revenue per year for last year. Again, share price plummeted 2020 and back up, although now it's back down and down for 22. And if we look at the coronavirus dip to recovery, from February 20 to April 21. So it took a long time for that company to get back to where it was. And I know also in the UK there's a material shortage as well. Material shortage slows building boom. This is from Investor Chronicle in October 2021. So if we go to the other side of the pond, Home Depot, leading retailer of home improvements, Lowe's company, home improvement, Sherwin-Williams company, manufacturer and distribution of paints, coatings and associated products. What's happened with Home Depot? Okay, so in the coronavirus they came back in 2 months, March 2020 to May 2020, and they were back to where they were before. That's massive. Home Depot, commonly known as Home Depot, is the largest home improvement retailer in the United States, headquartered in Georgia. And again, same story with Lowe's company. 2 months they were back to where they were before the coronavirus. And then the paint company, just as quick on that one. However, if I look at this paint company here, Sherwin-Williams, they're down for the year 30% to March 2022. Sherwin-Williams is an American Cleveland, Ohio-based company in the paint coating manufacturing industry. At a glance, company revenues by segment, America's performance coatings, consumer brands. If I look at this article here from CNBC, the stock was upgraded to buy from a neutral by Bank of America. That was about 10 days ago. If I look at their annual report here, financial highlights for 2021, that all looks quite flat to me. There's nothing that significant. Net sales, net income, cash dividends per share. That's higher. If I keep going down the annual report here, they've got two charts which stick out to me. One is shareholder returns, comparison of cumulative 5-year total return, comparing them to the S&P and a peer group. And the next chart, dividends per share. So this company is obviously very hot on looking after their shareholders and making returns to them. That to me is quite a good sign. So let's try to understand a bit more what's happening with homes. In general, we can say these are correlated: home improvements, paint, moving, etc., etc. The scorching housing market may get a splash of cool water this summer from rising inventory. That was yesterday. While soaring mortgage rates have caused mortgage applications to dip in recent weeks, it may take time for waning demand to translate to lower prices. After a decade of underdevelopment, a whopping 64% of prospective sellers anticipate placing a home on the market within the next 6 months. I mean, that's never going to be accurate. You're never going to know that for sure. And if we continue looking for similar companies here, I come across this company, PPG Industries, supplier of paints, coating and specialty materials. Similar story, down in 2022, recovering again ever so slightly. In this context, what we're trying to say is something's going to happen when the economy slumps, when people have less money, when the recession bites. Companies will move. Things will become more valuable and other things will become less valuable, hence the nature of the stock market. We're floating around this idea of home selling, home buying, home improvements, the manufacture of paints and people relying on their existing homes rather than moving. But we're saying the recession isn't going to kick in until early 2023, so that's another 3 quarters out. What I'm going to do is I'm going to keep my eye on this paint company here, along with the 2 companies I've identified in the previous videos, and then try to see what's going on with mortgage rates, interest rates, housing, people buying and selling, the home improvement stocks, and then try to take it from there, because in theory, if people are saving money now, generally when people talk about a recession, people start saving money, companies start pulling back, and it happens anyway. So we can say it's pretty much going to happen already. But it won't be until things start to move we can make predictions on outcomes. I imagine I'll be picking this up in 3 months or so when some more activities happened in the markets. Thank you for watching. Please like, subscribe, comment. I will comment back, and I'll see you in the next one.
See the wizard, the wonderful